Let's ask Kelvin Tay, Chief Investment Strategist from UBS Wealth Management. Kelvin, hi. Thanks for joining us today.
Hi, good morning, Mark.
Kelvin, what really came out of this weekend's G20 meeting in South Korea? Yes, lots was said. It seems as if there was some sort of unanimity on currencies. But in essence, what came out of this meeting?
I don't think anything has actually changed. It's pretty much status quo. So going forward, we are likely to see the Federal Reserve, the Bank of England, and the Bank of Japan go on quantitative easing. As you can see, the Asian currencies have actually reacted on a more solid footing to that. We're likely to see the dollar actually weaken against the Asian currencies. We're likely to see more flows coming into the Asian currencies. And that, in turn, should actually be positive for the Asian equities.
Yeah, the Asian equities are on a remarkable run, aren't they? The MX, the Morgan Stanley Capital International Asia Pacific Index, it's up 20 or so percent since May. Has this rally got further to run, and what's going to be the fundamental drivers behind it?
I think in terms of the valuations, I think we are basically seeing a lot of liquidity flows coming into this region. Are they merely driven by just pure fundamentals? The answer is not. It's largely driven by the fact that the US dollar has actually weakened quite substantially against all major currencies since Ben Bernanke's Jackson Hole speech on the 26th of August. If you measure the performance of the Asian equities index back to the 26th of August, you will see that the outperformance has actually been very, very sharp. As long as these capital inflows continue unabated, you will see the Asian equities do well. If the dollar actually rebounds on a short-term basis, then the Asian equities are likely to actually come off.
Do you see, though, the dollar rebounding on a short-term basis? If there's more QE, it seems as if the dollar could be heading in just one direction.
Yeah, the markets are basically pressing in right now the fact that the Federal Reserve is likely to actually embark on basically between $200 to $300 billion worth of QE in a quarter. If they come in shorter than that, then yes, I think the markets, the US dollar is likely to strengthen. If the Federal Reserve comes in more than that, then the dollar is likely to weaken. So that's where we are actually looking at right now.
And your pick, Kelvin, seems to be A, Chinese equities, and B, Asia fixed income. Just briefly explain why. Chinese equities, largely because they have been the laggards thus far this year, and we believe that the Chinese government is actually towards the tail end of the rate tightening cycle. We have perhaps another 2 or 3 interest rate hikes to go before it actually comes to an end. Where Asian fixed income is concerned, it's largely because we believe that the strong fundamentals of both the Asian governments and the corporates will stand in good stead. And therefore, the Asian fixed income space is likely to benefit from further inflows due to the fact that you could see a lot of potential credit yields compression and credit re-ratings where that is concerned. Kelvin, thanks. Kelvin Tay there from UBS Wealth
Thank you very much,
Management. Mark.